Good morning and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bond, and I'm very lucky to be joined by Christian, CEO of Elements, a tech-enabled insurance company. Christian, good morning. How are you doing?
Good morning, Alex. Thanks a lot for having me, and I'm actually doing fine. Thanks.
Yeah, always sounds a bit false because I know we've always been speaking for 5 minutes, but I always like to reassure people that you're okay and you're not here under duress.
Yeah, but we had the first jokes already, so it's actually I'm actually really fine. Yeah.
Yes, good. Yeah. Well, look, I obviously I've introduced as a tech-enabled insurance company, which is a good starting point. But it'd be lovely if you could introduce Element and give us a kind of short overview of the business so people understand.
Yeah, we are an insur tech, and in order to be, at least in my view, a proper insur tech, you need to combine the two words, and that's insurance and technology. So we are a fully licensed insurance carrier. We're an insurance company, licensed in Germany under BaFin, but can work via freedom of service in the rest of Europe. But we are also, and that's actually the heavy lifting to do both, we are also a technology company by heart. That means we have built our, call it the back end, the middle layer, everybody has different words, and for that ourselves. So we create and administer any kind of P&C insurance policies out there in the market, and we do that for others. So we've built the value chain internally on our own proprietary tech, including the operations. But what we don't do is the marketing, the go-to-market, the customer acquisition. So legally, we own the customer, but we are probably one of the few startups that do not want to own the customer in the market.
Thank you. I'm always impressed by how succinct people can manage to cover that off, but that's really helpful. Thank you. I want to get into this kind of value chain that we talked about, but I wanted to just kind of, sort of start at the beginning, particularly with your profile, because I'm always intrigued to kind of speak to people that come from external to kind of the insurance market. And I think that probably lends itself to some weight to what you said about being a technology business and an insurance business, because I'm right in believing that your background's more in the technology space and leadership of technology businesses than insurance.
It's very nice of you to put me in the technology space. I think somebody who's really in technology wouldn't say that, but from the outside, probably I'm more tech than I'm insurance. Yes.
Yeah.
I'm myself. Yeah. I come more from the B2B world, e-commerce world, and mining and metals. So very, very different parts in the overall value chain of this world and how the world works. And I always perceived insurances as boring and whatsoever, and it turns out it is not. It's actually very complex. It's very interesting, and the complexity, I think technology was made to solve complexity. Yeah, complexity as a service, we often say for Element, and that's then really, really cool. And perhaps that answers a bit what they wanted to say about how does somebody not coming from the insurance industry can even possibly think of going into the insurance industry. Yeah, I think it's still perceived as very boring from the outside, and I see this as a competitive advantage by now, because then nobody moves in.
Yeah, I think that's very true. There always used to be this terrible joke that if you had 3 sons, one to be a surgeon, one to be a lawyer, and then the simple one went into insurance. And I think it's always had that reputation of being more simplistic than banking, more boring than or less exciting anyway. And I think that's what's led to this kind of sort of slightly delayed explosion in the investment in insurtech, whereas a lot of the kind of neo banks obviously began their journey earlier, and then before that you had kind of the evolution of things like retail. Insurance is just a little bit late to the party, but yeah, absolutely, it's kind of still got a competitive advantage. I'm intrigued. There's obviously someone coming outside in, coming from kind of, you know, place like Groupon. Is there anything that you learned from the insurance market that surprised you, that you hadn't expected?
Yeah, I of course did my fair share of slowly getting into the industry. I invested in a few startups purely out of the people that went into it, not really understanding so much about it. But then also in my previous job at Rakuten, we with even consultants and everything went through the whole industry out there, and banking and insurance, and with that I started to get in. But what surprised me when I was in is that exactly the opposite of what perhaps the naive perception is. It's not boring, but very interesting, and the people are also not boring, but they are actually very friendly. Yeah, and they just, I think, because the perception onto the industry is that people are a bit defensive when they are working in the insurance industry, and they don't even showcase the complexity, the integration of the value chain in insurance companies is so much deeper than probably in any other industry I've seen. If you look at larger insurance companies, they do everything from sales to the insurance product to the operations and even to the reinsurance. So there is no delivery market. There is no, what in the automotive industry might be a Bosch or a Knorr or something. It doesn't really exist. Some tech providers, and that really, like, it surprised me that the complexity is so strong, and that political forces led to very strange market structures. Yeah, you have the mutuals or the cooperatives in the market that no KKR, no equity, no Allianz can consolidate the market. So you have a fragmented market where each company has a fully integrated value chain, which economically doesn't make sense at all, but it is the case. And now technology hits that structure, and it will form something new. I'm honest, very honest. I don't know really what the new will be, but it will be different. Yeah, technology will change that older structure that has been built there out of different forces. And then being part of that is actually really, really cool. And the incumbents, for me, they are not competitors, because I think we work in different markets. They're very, very open. If you perhaps don't stand in front of them and telling them that what they've done 150 years is stupid, and that you build the biggest insurance company in the next 3 years, because they are smart and they know that you won't.
Yeah. I always, I don't know, I just have this analogy in my mind of like the young pup upstart, like barking at the big dog, and the silence being met by the big dog in the insurance market has been taken to be seen as like weakness or ignorance. And it's like, no, they just know it's a little bit more complicated than you're making it out to see. I mean, I think it's very easy, and we've seen a lot of marketing which has been, you know, insurance is broken, and that for me was kind of an interesting marketing point, that when the first company did it. But when I've read the you know, the 100th new insurtech company that says insurance is broken, it's like, it's kind of lost its magic, and now it feels a bit sort of almost an ignorant point. And it's more that insurance needs improvement on its delivery, and it needs improvement on its processes. But to say insurance is broken is to invalidate an entire industry.
Yeah, and the general idea of insurance, of course, is absolutely perfect, and it's very much value creating. And if you look at a lot of these players that might get out, and there are so many that I can say that, and without probably touching any specific name.
Yeah.
And then if you look deeper, very few do this heavy lifting of being then an insurance company, which you need to be, because if you don't own your underwriting, how can you fix what is supposedly broken if you then rely on an incumbent insurer to underwrite your risk. I thought it's broken. And the same on the technology side. If you just put a nice front-end app to it, come on, yeah, this is a work of a few days, and nobody wrote the chatbot internally. They just take a tool to it, and then saying this is now disrupting insurance. As you said, this is very unfair to what, you know, some really cool, from the incumbents, there's some really cool. There's a reason we don't do motor. We think that in motor, man, there are quite some smart players out there, and they earn money. Of course, if you just underwrite risk at the 30% loss, you know, it's easy. Yeah, I come from the outside, and the first thing people told me, you know, you can grow as fast as you want. You just have to cut price. Yeah, you get all the risk. Easy. Everybody will want to give it to you. So your top line grows through the roof. The question is, do you at the end make money with it? And you cannot just write it off. You know, if you outgrow your problem, you can write off a bit, but not a lot. And that's why I think there are not so many companies that do the heavy lifting of both insurance and technology. And if you look, people that started with an MGA and some technology, they at the end then acquired a carrier, or they turned into a carrier. So it's just a question of when you do it. And we decided it's heavier, it's costlier, it takes a bit longer at the beginning, but we wanted to do both right from the beginning. And now I think we are very, very flexible, from being it parametric insurances to any kind of standard insurances to any kind of B2B to B to whatever value chain integration, whatever kind of data integration. And the insurance industry is a complex one. So you have to offer a service that handles the complexity, and that's technology-wise not so easy. I haven't seen so many, at least. No. One product is easy.
That's very true. And I think that's it. I mean, I think, you know, someone said to me that some of the businesses that have been launched in the insurtech space, you know, are they even products, or are they just features of products? And I think there's definitely a risk there that, you know, unless you're offering a real suite of end-to-end value chain solutions on a technology point of view, you know, your best hope is to be acquired. Your worst fear is to be basically made irrelevant by better technology, which obviously is always the case with technology.
Or you run out of marketing money.
Yeah. But I wanted to actually just circle back on the business model, because I do think it's interesting that decision was made. So predominantly your B2B to X is kind of the I just wanted to sort of get the thinking behind that. You know, why not look at alternative models, or did you look at alternative models? And you know,
like any proper modern company, you have tons of ideas coming up every day. So and probably they're all in their own kind valid, but you can't do all of them at the same time. So yes, we of course looked at the B2C at the very beginning. We strategically decided it's an absolute no-go for us. I also don't know how the model in P&C could work. If you perhaps upsell later life and health and whatever, it might work in the model, but we don't believe it works. So I think we explored a lot. We went also to more classical products and explored it on broker pools or something, just to test a bit. What does it mean? What technology requests are out there? Mm-hmm. This idea that you know better how the market works, especially me, who doesn't come from the industry. You need to have a lot of product partner combinations to really understand what the market really needs. And of course, they need great products with great features at the lowest price. Yeah, that's, you know, everybody can write that down. But what does it actually mean? What kind of integration do they need? Do they really need real time? Do they need ops support or not? Or an MGA, do they want to do it themselves? And how do you do data exchange? How do you be compliant on a European level, both when it comes to the insurance regulator, but also from when it comes to data protection? That's then where the complexity starts. And we decided that we serve a couple of markets. So not only one, we are a strong believer of embedded insurance. Whether this will take off in 1 year or 2 years, probably not so much on numbers, probably on use cases. Will it be very strong in 5, 10, 15 years? Yeah, that's what we believe. And that's what we build now. We build the relationship with our partners. If Vodafone, for example, on an embedded insurance solution, all you type in is your telephone number and the rest is done with one more click. You have an insurance product that's actually relevant to you. Or we did banking solutions. We now did the Sparkasse. That's for non-Germans very difficult to actually understand. It's like the mutuals out there. It's still the largest banking corporation in Germany. And we do the cyber protection or the buyer protection for the Apple Pay. They do with the Giro card, again, a very German thing, but it's the largest payment method in Germany. So we very much believe in that space. Do we believe that the highest numbers will come out of that in the near future? And actually not. We think that the classical insurers, or the ones that have a purpose of distributing insurances, like MGAs, are, or at least the demand we see from them, currently by far outstrips embedded insurance play.
Yeah, I mean, I was thinking as you reflected on motor, and obviously I know that you're not operating in the motor space, but when you think of acquiring customers particularly on a B2C model, you know, I think it was Progressive. Someone came out and said, basically, if you're not spending $1 billion a year on marketing, you're not even going to make a dent. And then just reflecting on the model, you just think, well, why spend that yourselves when you've got people they've got that customer engagement? You just need to give them the tools.
I hope that there are a lot of out there that spend $1 billion on customer acquisition, and then they have to do something with these customers.
Yes.
And they have to offer them 30 different insurance products. And I'm very willing to support them with not the motor part, with the other 29. Yeah.
Yeah.
And we do that cheaper, better integrated at their brand and whatsoever. When I looked at the very beginning on the market, if you look at the unit economics of insurance, there's a lot of room for improvement. Mainly, call it on the claims, on the fraud part, on the internal operations part, on the overall efficiency of how to set up a company without the legacy to it. The problem is that these, 20 percentage points don't make a customer buy. You know, in my previous world, if you were 2% cheaper on an Xbox, man, everything sold. Yeah, easy. Insurance doesn't work that way. So you need the customer, you need the trust, you need the brand, you need the engagement. And there are actually a lot of companies who are very good at that. Online, offline, multi-channel, whatever, you know, all the marketing slang is there. And they know it's so much better. I'm a B2B guy. They know it's so much better. And we believe that, you know, why not combine the two things? There's, you know, people say every company will be a fintech, you know, and if insurance is part of fin, then we'll be the enabler for every company to be an insur tech, or at least offering insurances and being that complementing your value chain, and therefore offering something to your customer that enhances the overall positioning of your company, your brand, and helps you to sell a product, because insurance actually enables that product. Or if it's a pure upsell because you have the customer interaction, that's all fine with us, but that's not our specialty. We believe that there are so many out there that own the customer or have a good customer access, and we don't want to double spend. We are not in the CAC versus lifetime value play, which makes it a bit more difficult on the investor side, because CAC versus lifetime in an Excel sheet is actually rather easy. An insurance P&L is not.
I think something I was going to ask you, because you come from a different market. One of the themes that I've picked up is I think in insurance, one of the challenges has been changing the sort of traditional insurance delivery model, the customer experience, and then creating it more modern. Because one of the things that I've come up against is a little bit culturally resistant of saying, well, insurance is more complicated than that, or it works differently. Because my argument has always been that I'm a consumer and of many different things. So I'm influenced by my experience with Amazon, my experience with, I don't know, anything I could buy. It just bleeds into my kind of consciousness. So even if I'm buying commercial insurance for, some huge organization, I want it to feel the same. I want that instant delivery. I want the simplicity of it. And I think simplicity has been a challenge. Do you think that's one of the advantages you bring from being more consumer centric?
Yes, whereas we don't serve the consumer, but I think we provide the tools so that you are consumer centric. And you use a lot of words which are out there to describe this consumer focus, and simplicity is one thing, but what does it actually mean? It should be simple for the consumer, which means you need a lot of data points not coming from the consumer, because then it's complicated. But that means you need the data integrated from somewhere else. Mm-hmm. And again, we come to our business model. The partner has a lot of data. So if you, in a compliant way, manage to utilize the data, the customer doesn't have to provide the data, and the customer gets a better tailored product. Whether that might be used also for a higher margin, yes, but that's fair in a free world to do so. Yeah, if you don't cheat the customer, and the customer protection is actually quite strong. So too much cheating is, by now, at least from what I see from now being in the industry, actually not possible anymore. And if it will be found out actually quite fast. And providing that, as I said, complexity as a service, this heavy lifting, this back and middle layer operations, so that companies that serve a customer and know a lot about the customer, have a good customer interaction, can easily integrate that and therefore provide a simple product. That's our purpose. Yeah? And then I think, because if each company will try to do that, they will not create that simple product. Because for that little market they can serve, even if they are a large platform or whatsoever, it's not worth to invest the hundreds of millions you need at the end to build that complexity as a service machine. But we build it and then we provide it to the market. Mm-hmm. And that's why also we provide it to insurance companies, we provide it to MGAs, we provide it to the Vodafones, the Sparkassen of this world, because it's actually a service. Yeah, this data integration, complexity, customized product, it's a service so that other partners can serve their customer better, or call it simpler, or in a more customer centric way. Mm-hmm.
Yeah, no, it makes sense that the more complex the problem you're solving, the customer doesn't have to provide that complexity. B2B partnerships, or for you, what makes the most successful partnerships for you in your business? What are the sort of key elements that drive that successful partnership for you?
I think if it's clear that everybody has a certain USP, and then you basically Lego build it all together, and then you see, hey man, if we do that together, we have actually a great product, a great service, whatever the outcome is. And then I think being honest about that and sharing, and then building something, and then you can actually be quite fast. We try to build our USP. Our partners' USP is mostly very clear: the customer access, the brand, the data, of course, and then combining that actually build something quite cool. And that's why we are, for example, not the right one to just provide whatever the cheapest standard product on the market. Handling complexity, handling data is not a USP anymore. Yeah, you basically do a bet in your underwriting or in your pricing. That's not our model. So others are probably much better in providing the cheapest standard product on the market. But even that, I think we just won for accident insurance the best insurance award. But that's a side topic. That was because our partner was actually developing it. It was not us. Yeah, it was our partner who came up with the structure of it, and we just used our machine to handle the complexity and he demanded in order to create a product that was then rewarded, and it's not our intellectual property, so to say.
Mm-hmm, mm-hmm. Yeah. So I want to switch gears slightly and talk to you about culture, because culture is very close to what I do, looking after the talent side of the business. It's something we talk about a lot when trying to attract the right people. But obviously you're growing very fast. You're relatively, young company. How do you maintain that culture when you're growing so rapidly? And what sort of practical steps can you kind of put in place for that?
Yeah. First of all, the culture part, very, very important. The second part of your question, the maintain part, I'm not so sure actually, because that would mean that the people who were there first decide on the culture, and then you maintain that culture. Probably the initial group, the first group, is a quite homogeneous group. And if you look at probably any company now, us as well, we have a very diverse group of people, and therefore I think evolving culture is even more challenging, because maintaining and then just stick and saying that's it, and if you don't fit, please leave or something, it's actually easier. I just don't think it's the right approach. So culture is something that is changing, evolving over time. And if you look at us specifically, we have called it 4 culture groups, and I don't mean from where they are from or what gender, what belief or whatsoever. That's not what I mean with culture. They're from everywhere. And you have tech, and most of the tech, at least in the past, good tech didn't have a lot of insurance history. If you look at the insurance people, they had a mid-level experience, so to say. So they still want to change something. They still want to change course of their life, but they have a certain experience, but they're still, say, culturally closer to a traditional insurance company. Also because a traditional insurance company normally is very strict on certain hierarchical approaches or certain forms of what has been there for 100 years now. And within these groups, you then have certain subgroups. We have call it the regulatory part, a bit more experience. They at the end have a final say in certain areas. They need to be stricter. They cannot just always laugh and say, let's run fast and whatsoever. And then you have the business people who somehow glue it together, and sometimes have to make a 10 out of a 3 and then round it to 100, and on a slide it's suddenly 1,000. And and these cultures you have to bring together. And a company grows with a different momentum in each phase and with people coming in. That's why I think we have actually a good culture. Could I actually really actively describe it? Probably not, because we are very much in the forming phase. Yeah, people are coming. Some people, unfortunately, are leaving. There's a strong forming of culture going on. It's probably not what you actually asked, but it's a bit how it is at Element right now.
I think it's a really important point. I mean, I talk about this a lot. So I do a lot of my work with like seed funded, Series A funded businesses. And it's a really interesting point, because the people that join seed and get you from 0 to 10, and not necessarily the people that take you from 10 to 100. And in fact, they're not even necessarily the people that want to do that journey either. There are kind of people for different stages.
And perhaps the culture is different. Perhaps at the beginning, it's the famous pizza nights and whatsoever, and everybody is perhaps incentivized by because they own part of the company. And then you grow, and then you perhaps hire a specialist who has 2 kids, is 45 years old. Yes, upside is one thing, but a certain base salary, and you can't just then live out of your one room or whatever that perhaps the founder is still doing in certain imaginative dreams or something. So I think it's very, very difficult to then say everybody has to earn whatever $20,000 a year and has to commit and everything. People just can't or don't want to, and then you would exclude them, and then you are not diverse. And without the diversity, you don't have the potential of the people, and then I don't think you can build a great company. That's why I think culture has certain boundary conditions. If you're an asshole, you're out, whatever kind of belief there is around it. If that's culture, yes, there's culture, but that's not what the culture of a company at the end does. And I think there was a famous company said, "Don't be evil," and I think that changed over time.
Right. Mentioning no names, but absolutely right. And I think there's something really important in what you said there, because it's something that comes back to me when I'm working with companies trying to find talent. And sometimes there'll be restrictions on compensation, which I understand, but there's a direct implication on who you can and can't hire, because I think that's largely speaking, and this is a huge sweeping generalization, but you miss out on the middle in that a lot of people can be flexible earlier in their career because they don't have as many commitments financially, or later in their career where they again might be free of commitments, children have been through university, left home, etc., house is paid off. But the bit in the middle where you might have a young family, or just have financial commitments, then having to have the opportunity to go and work for a startup, and someone offering you this fabled equity as a kind of compensation, it's a real challenge. And I don't know how to square the circle or even advise it. I don't know if there is a way around it, because there are limitations on the money that can be spent, because it should go on growing the business. But I think you just have to acknowledge that brings a challenge with diversifying, and it may be something that you have to address as you become more mature.
Or you have to accept that diversity is there, and diversity also means that not everything is the same or equal. A junior lawyer or a junior dev have higher salaries because the market offers just higher salaries than a junior XYZ in perhaps other areas. Is that fair, or should I, out of culture, pay everybody the same and therefore invest the money which I might not have to spend? I don't think there's really a right answer. There might be totally the right thing to say, no, this doesn't matter. We all contribute and therefore we pay the same. But then you have a certain distinct approach. But I think it's totally allowed that other companies have a different approach. And luckily, at least the people, at least we try to attract them that we have here, they can work anywhere else. So there is no slavery. They can leave tomorrow and have another job. Immediately. So they form part of that culture, and I think they are very well aware that person A might earn more, or decided because perhaps even has private wealth, or has no family and can live on a lower salary and opts for more options to it. But this is just as it is. People are not the same. Equal, yes, but not the same. We are different. We have different objectives. Perhaps people want to work for 20K with a high upside, and others say, if I don't have 100K, I can't maintain, and I would get it in the traditional industry, so they stay. So I think you have to be very flexible. And that's why I say the culture has to evolve and over time. I don't know what kind of people we perhaps need in 2 years. Yeah, and perhaps they will totally change the company. Perhaps I'm wrong in 2 years. Yeah, I hope just somebody will tell me, or I realize, because then it is better for Element if somebody else is doing it. Yeah, I hope not, but it might be the case.
Yeah. No, we don't. I don't think people talk about that enough. I think in my experience, people are very fearful of people leaving the business, for example. And a certain amount of churn is healthy. You want new people bringing in. You want new ideas, and you don't get that. But there's definitely a.
Excuse me when I interrupt you, because I think especially when it comes to senior people, if you think that your job is actually to grow your team, and often people say, if you make yourself redundant, perfect, then I think you perfectly achieved your job, because somebody else can do it, and then you're free. And then you're either free to do something within the company, but perhaps there is just nothing at that moment. So then you have two options. You have to realize, oh man, and perhaps you do some kind of project work, or you think about the future. But if that is a long-term thing, you have two options. You can either protect your position and keep your team down, which is definitely not what you should be doing, or your team is leaving and then you constantly have to train people and you stay on top, or you leave. But this leaving is often considered as extremely negative. Whatever, company X lost a leadership person X, Y, Z. Perhaps this was the best thing ever, because the person was just a wonderful leader that grew the team. But again, I don't know, and I definitely don't judge from the outside. But it's not easy. 100+ opinions on what is the right thing are not always going in the same direction.
Yeah, no, definitely not. And just to touch on that, and I'm conscious of your time, but I'll start to wrap things up. But I wanted to ask you, the business and yourself hired a co-CEO last year who was more from a traditional insurance background. Was that important for the interaction of the insurance, and why was that the sort of time to bring that person into the business?
Yes, it was very important, and I'm very, very glad of that. Could that have happened a year earlier? Yeah, of course. Yeah, was it perhaps the right time, also with the overall situation? Eric specifically, it's a very rare breed. You don't find people that combine that and have basically built and what we want to build internally multiple times, that really fulfill the criteria, which is actually quite high on and finding somebody who is by heart actually driven, you can call it entrepreneurial, but driven by building something, but having the functional, the content expertise to it. And then it works on the human side, on the cultural side, on the trust side. There are not so many, I fear, out there. If there are more, please call me. We are very happy to open up on that. I heard you're in the business as well, so man, please, No, but it's very rare to find it. So I'm more than happy, and also after half a year where this initial grinding of finding ways, and then I have to realize, man, I would have done it that way. Why is he doing it differently? And that it can only be wrong. And then you realize, how no, he is actually right, not you are right. And that's actually a good feeling. It's a good feeling to realize that people improve the company by doing something differently than you would have done it. And then so yeah, but man, if there's a fourth and a fifth and a sixth and whatever, man, perfect. Please come.
Yeah. I'm gonna take that as a perfect point to end on, because I've now got recorded for the public consumption that you've asked me to send you brilliant people.
Yes, absolutely.
Yeah, but Christian, thank you so much for your time. I really appreciate it. I think it's a fascinating business, and it's a really good trajectory. And I'd love to catch up in probably a year's time and do another episode and see where you are then, because probably be double or treble the numbers. And yeah, it'd be great to see how far on the journey you've got.
Yeah, Alex, thanks a lot. And we trouble, of course, bottom line, not people, but yes.
Yeah, true, very true. I'm always obsessed with the people because that's good for me.
Yeah, but we will increase on the smart side of the people, definitely. Yes. Yeah. No, thanks. Really, thanks a lot. I really appreciate it. All what I thought before was nonsense. So yeah, thanks a lot for giving me the opportunity and all the questions. Thanks.
Thanks, Christian. Goodbye.